Oil spikes and stocks tank as the Middle East conflict paralyzes global shipping. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The Dow Jones dropped roughly 785 points to close near 47,950. The S&P 500 fell 39 points to 6,830. The Nasdaq Composite slipped 59 points to finish at 22,750. The Magnificent Seven saw mixed action today. Apple, Meta, and Alphabet dropped about 1% each. Tesla traded mostly flat. Conversely, Amazon gained 1% and Nvidia closed slightly in the green. Defense and energy sectors were clear winners as geopolitical tensions escalated. Airlines and retail took massive hits, sinking rapidly as fuel costs soared. Bitcoin hovered near $72,700. Gold pushed over $5,100, and silver spiked toward $93. West Texas Intermediate crude exploded, jumping nearly 9% to $81 a barrel. The massive spike in oil and the broader market sell-off were driven directly by the escalating war with Iran. The Islamic Revolutionary Guard Corps effectively closed the Strait of Hormuz, causing tanker traffic to plummet. This supply shock sent crude prices to their highest levels since 2024, crushing airline stocks due to soaring jet fuel costs. However, the Nasdaq fought off deeper losses thanks to an earnings blowout from Broadcom. The chipmaker surged 5% after reporting a massive 106% jump in artificial intelligence revenue. This unexpected strength in the AI sector acted as a life raft for tech stocks. Meanwhile, solid economic data added more pressure. ADP private payrolls added 63,000 jobs, and jobless claims stayed low. This resilient labor data fueled fears that the Federal Reserve will keep interest rates higher for longer to combat energy-driven inflation. The 10-year Treasury yield climbed to 4.14%, while the 2-year yield sat around 3.58%. The US dollar index surged to 99.6, and the VIX volatility gauge spiked 11% to 22. Rising yields and a surging dollar show that investors are terrified of sticky inflation and are dumping bonds to find safety. The CNN Fear and Greed Index sits at 37, remaining firmly in the fear zone as institutional investors brace for more chaos. Looking ahead, markets remain trapped in a stagflationary tug-of-war, with geopolitical risks weighing heavily against tech growth. Traders are laser-focused on tomorrow's critical February non-farm payrolls report, which could redefine rate expectations across the board. Over the weekend, eyes shift to Japan for their snap parliamentary elections on Sunday, threatening massive currency volatility. Next Wednesday brings the crucial U.S. Consumer Price Index report to reveal broader inflation trends. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.